Let's look at activity number 7. Tom, who is 52 years old, is an employee at a research company. He earned a monthly income of worth 29,000, including bonus, once in October every year, of which he is equivalent to the monthly income in for 2018-2019 tax year. He contributes 75% of his basic salary to the pension fund, and he contributes, or he also donates 46,000 per annum to the registered charity organization. The donation is tax deductible. He contributes 4,550 to medical aid monthly for himself and 2 children. And his monthly income was increased by 7% on the 9th of March 2018. All right. Now, we need to know, first and foremost, we need to identify. We need to identify some factors here. We need to highlight some factors here that we see. We need to identify some factors. We need to identify some factors. One, we see pension is here. 7.5% of the basic salary. Then we have something here new, which is including bonus. Remember, the bonus is not, we don't pay tax on the bonus. Sorry, we don't pay pension on the bonus. Pension of the bonus. So here, what you're going to do first and foremost, look at this. They say it's monthly. They are saying it's monthly income. They are saying it's monthly income. They are saying it's a monthly income. Take note of that. It's monthly income, including bonus. But this bonus only comes in October. That means in October it's paid twice. It's fine. Then we have pension, contribution to pension. Then we go to donation. The donations, they are not taxed. Donations is tax deductible, meaning we don't take tax from the donations. So we remove them before we start calculating tax. He contributes this much to medical credit, but we shall not use this. But however, we shall use what we call the MTC, medical tax credit. Then his salary was increased by 7% on 9th March of 2018. Now, when you look at 2018, 2019, simply meaning the table that we're looking at is of 2019. Okay, let's go through that and we see what we shall need to do. Number one, what is the name of the tax collecting agency that is used by South African government to collect tax? You should not go beyond this. That is it. The South African South African Revenue Services. South African Revenue. South African Revenue, not reserve, but revenue. Revenue Services. That's what we use. Then determine his annual taxable income. This is where we are. How many marks? 7 marks. So you're going to get the basic. You minus pension. You minus the donation. You minus the donation. For now, that's what we see that you're going to deal with. There's no UIF. And we said UIF is not subtracted. So you subtract pension, you're subtracting donations. Any contribution? No. Medical aid is fine. The monthly it was increased by that much. So someone who might increase the money before, which is okay. All right. They were not that much specific. Then in the ninth month of the yeah. So now if it says that the monthly income was increased by 7% in the ninth month of 2018, and now we are looking at 2018, 2019 year, that means already the money is increased. You see that? But anyway, someone can go ahead and increase. It's fine. You know how to do it. But the main thing, or what you have to learn is that how do we get taxable income? Get the basic salary minus pension minus donation. Everything has to be multiplied by 12. But when you take a clear look at this, that we are having already pay, when you look at the donations, they already annum. Pension, this is it's going to be monthly because you have monthly income. All right. Then so you need to deal with it around the, then another thing that you have to know that pension does not apply on the bonus. All right. Because the basic salary or the gross salary now that you have, the gross salary will be 29,000 times 13. You understand? But then the pension that you're looking for, it will equal to 7.75 over 100 times 29,000 times 12. Why is it 12? Here we don't include bonus. Why is it 13? We are looking for the total annual gross salary. You understand? Annual gross salary. That's what you're multiplying by 13. Here we are looking for pension. All right, you get the answer there. Then you already have the 46. All right, this is going, even the answer that you get here, they are going to be subtracted from this that you have. All right, that's what you're going to do. All right, there we go. We are looking for the annual taxable income, and we said taxable income will equal to the basic, the gross, including what? Bonus, minus the donation, which is already minus the donation, minus 7.5% times the 29,000 times 12. Here I'm looking for annual pension. This is already annual. This is also now annual. So you put everything in and you get the answer. Get the answer as 29,000 times 13. There's no way you're multiplying it by 13 because you're looking for the total income the person gets. Minus 46 minus 0.75 times 29,000 times 12. So if you subtract this, you're going to subtract 20. This is good after subtracting these two. All right. Subtract these two. Okay, let me see. Let me add them. So just subtract. You have 72,000. You have 72,000. 72,900. Subtract it from 377,000. And you get the answer as 304,100 rands. This is what you have. All right. Then they're asking you to calculate the tax medical credits. This is what I was looking at, the MTC. Tax medical tax credits. Now, when you look at medical tax credits, they will be determined by the number of dependents. Remember, it's himself and 2 children, so they are 3. So since they are 3, 2 people will share the first number, and 1 will share the other one. So these are the first 2, himself and the first dependent. That's why I'm multiplying by 2. Then plus 209 for the third person. However, we are looking at annual. These are monthly. So what we do, we shall have to multiply everything by 12. Multiply everything by 12, and you'll end up having your answer as that much. You have your answer as 9,948. So these are rands. So this is the taxable income, medical credit. Then we come here. Hence, calculate his annual income tax. Otherwise, they would say tax payable. Tax payable. So how are we going to calculate now? This is when we are going to use the taxable income. We shall take it to the table here, and we determine where the person belongs to. Remember, we calculated and we saw the taxable, we calculated and we saw that the taxable income is 304,100. 304,000, indeed it's here. So it will belong to this. It will belong to this bracket here, bracket number 2. What are you going to do? You say bracket number 2, and you pick this bracket here. You pick this number here. So which becomes 35,000. Sorry, yeah, 35,000. 35,000. 35,253 plus 26% into bracket. Now we bring the other taxable income we found out that this guy gets minus this number that you see inside here, 195,850. Put this in a calculator the way it is. We are answering question number 3.4. Then we shall come down and say 3,253 plus 0.26 times the number you get inside the bracket times 108,250. Put everything in a calculator there now. 108,250. So you see, you end up having 63,398. So this is when we say we take off the tax rebates together, and we also subtract the medical tax credit, annual income tax. So 63,398 minus, remember the person was 52 years of age, so he only qualifies for only one rebate. We shall subtract 14,067 rands minus, remember the tax, the medical credits, we got it as 9,948. All right, we say 63,000 minus 14,700, sorry, 14,060, 67 rands minus 9,948. So you end up having 39. That's how we do it. So this is the tax he pays, and these were the medical tax credits. This was the taxable income. The reason why we multiplied by 13, it was because it includes bonus, all right? But minus the donations, we don't get anything from the donations. Not so the donations are not taxed. Pension is not taxed, all right? Then we removed and we got the taxable income as this much. We went for the bracket and we got that much. Thank you very much.